All right. So, welcome everyone. My name is John Knight with FFL Knights. We have Neil McMahon, the president of FFL American Omega Group, and we're going to go over one of the concepts that we have called infinite banking. We just finished up a business development meeting, a very successful business development meeting, and we just wanted to give you guys some information about the infinite banking concept, which a lot of times it's only the wealthy that hear about this concept. So
Yep.
thanks, Neil. Thanks, Neil, for being on.
Yeah, no, thanks for having me. I appreciate it. So, John, the cool thing is this type of a concept, it's not new, right? It's just new to the masses. And it's something that I think, as you mentioned, the wealthy have known and have done for years. And that's essentially a kind of foundational cornerstone of what the banking system is built on, is what we're going to talk about. And the concept is infinite banking, or otherwise known as, you hear it called be your own bank. And the whole concept behind it, John, is instead of taking your hard earned money and giving it to a bank to let them do with whatever they're going to do with it, and I'm going to show you what they do with it because it's exactly what you can do with it. You're able to keep that money yourself, right? And then do all the different things, that the infinite banking system or be your own bank system allows you to do. So, I think first and foremost, John, I think I do want to make a comment about the organization that you're building. It's very impressive. You've been with Family First Life now for just about, what, a year and a half, 2 years?
Yeah, just over two.
Yeah. And, the organization, the agency that you're building, not only locally there in kind of South Central Pennsylvania, but, you're kind of reaching across the East Coast and spreading out throughout the country. So it's really, really impressive, the growth that you're having. And then the ability for you to use your experience to leverage all the tools that we have here at Family First Life, which we're a full service broker, right? And so not only do we help our clients with life insurance, but we help with mortgage protection, final expense, supplemental, right? So cancer, accident, sickness, those types of plans that help make sure that you have a paycheck coming in whenever you're sick or hurt or diagnosed with something chronic or critical or have an accident. But then on top of that, we're able to help our clients with retirement, right? Such as the infinite banking system, and then annuities and, safe retirement. And then on top of that, we're also able to help our clients with Medicare. So it's a full spectrum service that you're creating with your agency. And I just got to say, it's unbelievably impressive, man. If somebody's looking to get out of the rat race and get away from their job where they're working 40, 60, 80 hours a week just to make ends meet. And a lot of people are now, side hustle has become a thing, which is weird, but it is. People working 2, 3, 4 jobs just to make ends meet. If somebody's doing all that stuff and just sick of it, or they just want an additional side hustle to put a few extra $1,000 a week in their pocket, how can they get a hold of you?
So they can reach out to me either on LinkedIn under my name, John Knight, out of Chambersburg or Harrisburg. They can call me at 717-414-8015. Also on Facebook under John Knight out of Chambersburg, and then also on Instagram at john.knight.9047.
Absolutely. And one of the things I'm excited about too, that can help people take advantage of this infinite banking concept, John, is the debt reduction program that we have with our company through Empowering America, where, just recently, one of our agents had a client that had $40,000 in credit card debt. We were able to, it was about a $1,200 a month payment. We were able to take that payment down to $500 a month and then cut that debt more than in half, and she'll have it paid off in 2 years. So she's saving over $700 a month back in her pocket, which, John, is extremely important with inflation. You hear on the news today, they're talking about a recession, which, if you look at the metrics, a definition of a recession is 2 consecutive quarters of negative GDP growth. Well, that's happened. And so with everything going up, the ability for us to be able to help people get rid of debt and put that much money back on the table for them in their pocket is just unbelievable. So, it's pretty amazing what we do. So if I can share my screen, I'll go ahead and we'll jump into the infinite banking concept.
Yes, you can go. You should be able to go ahead and share.
All right, good stuff.
Let me see if.
Okay, let me know if you can see my screen.
Yes.
Okay, so I'm going to run through this relatively quickly, and I'm also going to, if you're cool with it, I'll go ahead and leave the subtitles on. That way, in case somebody needs to, in case somebody needs to see it, they can.
Sure.
Okay, so you can still see my screen, okay?
Absolutely.
Okay, good. So the infinite banking concept, I'm going to explain it, in a very easy to digest and easy to understand format. So basically, we all have an income, right? And that income can come from your job. It can come from your business. It can come from a pension or retirement. It can also come from an inheritance, right? And so typically when we have this money, we have a couple choices or different things that we can do with it, really. We can either save it, we can invest it, we can spend it, we can give it, right, to charities, family, donations, different things like that. But instead of putting it into, these different things or putting it into a bank and then saving it, investing it, spending it, and giving it, because most of our paychecks, John, or even our pensions or even Social Security, where does it go? It goes right into the bank, right? Well, instead of doing that, what if before we saved it, invested it, spent it, or gave it, we put it into our own, we'll call it our family bank, right? So when you take this money, instead of spending, investing, savings, and you put it into your own family bank first, the first thing you have is complete control. And what I mean by that is you dictate what happens with your money. In addition to that, your family bank is going to pay you guaranteed dividends every year, right? So for putting your money in the family bank, they're going to pay you profit upon the performance of the bank. In addition to that, when you put your money in there, you're going to receive tax-free growth, right? Very much like what you might experience in a 401k or another type of, investment where you can receive tax-free growth. The other thing is it's completely private, right? So the money that you put into this family bank, nobody knows how much you're putting in, and also, most importantly, nobody knows how much you're accumulating. If you've seen recently, they want to talk about legislation around, anything more than $600 deposits going into your bank have to be reportable to the government. Well, this is a way to keep that from happening if that ever, becomes reality. In addition to that, you have guaranteed growth for life. The other thing is when you put your money into your family bank, it's going to offer you protection. So, for example, protection from death. If you die, that money isn't going to be taken by the government and you're not going to be taxed on it. It's going to be able to be passed to your beneficiaries completely tax-free. And then it's also protected from creditors. So while your money is in your family bank, your creditors can't touch it. Nobody can sue you for it. It's completely protected. And also, if you pass away, it actually goes straight through probate. So it's not probated like the rest of your estate might be. Okay. The other great thing is as your money grows tax-free, it's exposed to zero market volatility, John. And what that means is no losses ever. Okay. The other thing is while this money is sitting there growing, it's completely liquid. And what that does is it allows you to leverage it to do things like invest, right? When you have money, you have opportunity, right? So if it's an investment product or you want to put your money into some other investment, the money is right there as opposed to being tied up in an IRA. And John, you and I both know that with an IRA, basically your money is stuck in there for retirement. And if you take it out before age 59 and a half, you're going to pay, in addition to federal and some states have state income taxes, you're going to pay a 10% penalty as well. So you're taxed extremely heavily if you need to pull your money out of your IRA. And what this does is you don't have any of those penalties and you don't have the tax burdens as well. You can also use the money for big purchases, John. So for example, if you need money to buy a car, help pay for college, pay for your child's wedding, you want to go on a vacation, you need it for, I have a client who is using this concept, John, to help make sure to insure his family because he doesn't believe in health insurance, right?
That's
He's paying all this money for health insurance premiums and, has all these limitations and deductibles and everything. He wants to be able to pay cash or not. His family's very young and healthy. So this gives him the freedom and flexibility to do that. And again, you have complete control, so nobody can tell you what you can or can't do. And because it's liquid, at any given time, unlike an IRA, you can give it, you can spend it, you can invest it, or you can save it. It's completely up to you. Okay. So from here, you're probably wondering, like most people, okay, well, this sounds pretty amazing, and I don't know anything about this. What is this, right? How do we do this? So I want you to, this kind of acts like a mortgage, right? So just like each month you make a mortgage payment to your home, with this infinite banking concept, you're going to make a monthly payment into your bank, right? And what's going to happen is, like with a mortgage, a part of that mortgage payment goes towards equity in your home, and you're going to continue to build up equity in the home. Okay. So picture your home, you're making these mortgage payments, and then a part of that mortgage is going to go towards the principal, right? The other part's going to go towards fees and interest. But the part that goes towards the principal allows you to build up equity, right? And equity is your money, or the portion of the home that you actually own. Now, as that equity builds, the lender, the mortgage company, allows you to do what? They allow you to take a loan against that equity in the form of a HELOC, or a home equity line of credit. Well, the thing with a HELOC is you're charged an interest rate that's not your money. So you're paying an interest rate, and there's a fixed repayment schedule. So there's a limit to the amount you can take. And then in addition to that, you have to pay it back, and it's on their terms at a specific interest rate. Sometimes you might not even qualify for it because they do have to check your credit. But then on top of that, you do have to pay it back. And if you don't pay it back, there's other penalties associated with it. So there's a few distinct advantages, John, when it comes to your family bank, or the infinite banking concept. So you are going to continue to make monthly payments into this, but you own it, so you control it. The other thing is, it's always guaranteed to increase in value, unlike your house, right? The home, I mean, right now you can see it in the market. As the market starts to cool because interest rates are going up, inflation is where it is, the values of homes are not what they were even 2 weeks ago or 30 days ago. So unlike your home, the value of this bank account is guaranteed to always increase. On top of that, John, there are no required repayments. So if you want to take money out of this, there's no required repayments. Okay, unlike a HELOC or home equity line of credit. So you might be asking yourself, okay, so all this sounds really great. So what kind of product is this? And it's a familiar product that we're used to. It's just how it's structured uniquely to be able to accomplish these different things. And John, it's a whole life policy. Now, it's not a traditional whole life policy that most people are used to. We deal with companies that are called mutual companies. Okay. And what that means is, instead of stockholders owning these companies, or they being, privately owned companies, the policy holders themselves own the company. It's a mutual company. Okay. We use companies like Foresters, which is a over 100-year-old company. We use companies like Lafayette, which is over 100-year-old company. We use A-rated companies that have been in business for, decades and decades and decades. Most of them are 100 years old or more. Now, how does this work, John? Right? The first thing is, you capitalize the policy. And what I mean by capitalize is you build value, or you build worth within the policy, you build equity within the policy. We call it cash value with your premium payments. So very much like the mortgage, when you make your premium payments, a portion of that premium payment is going to go towards your cash value. Number two, part of that goes towards the cash value and is locked in for good. Okay. And that money, unlike your equity can go up and down. The cash value is locked in for good and will always increase.
Mm.
On top of that, reserves are held by the mutually owned life insurance company. And again, you own part of the company.
And what do they say? Like the insurance company, for every dollar they insure, it's like $100 that they cover.
Yeah, so they have to have reserves to back whatever their insurance claims exposure might be. But then in addition to that, they have to participate in the state guarantee funds as well. So if an insurance company were ever to go insolvent, there's plenty to back it up. Now, the other thing is, John, I want you to think about this way. So after September 11th, and you'll even notice this in 2008 and 2009 specifically. Actually, let's talk about that because it's more relative to what we're dealing with today. So in 2008, 2009, we had a recession.
Mm-hmm.
I bet you on, you could name on two hands and, 10 fingers, 10 toes, how many not only businesses are no longer around, but how many banks and financial institutions went out of business? Can you name 1, 2, or 3?
Yeah. Washington Mutual, Lehman Brothers.
Stearns, Lehman Brothers, right?
Mm-hmm.
Right. So, and these are banks. These are gigantic banks that are too big to fail, right? Well, they're gone. Can you name a single insurance company that went out of business?
That's true.
You can't because none did. So Feel free to look it up. Not a single insurance company went out of business. In fact, there were some that were quote unquote too big to fail simply because of all the insurance business that they owned. They had massive amounts of premiums coming in. And this is why, right? So you kind of think, where's your money better kept? If you think about a bank, well, the FDIC insures you up to $100,000.
Yes.
If you have more than that in there, right? Then, oh, well, sorry about that. But with the insurance company, they do have to have dollar for dollar backed on every single potential insurance claim that they could, potentially pay. Plus they have the state guarantee funds. So with this too, you can access your cash value and it's collateralized by your death benefit. And then obviously the cash value that continues to build up. So how this works is if you want to take money out of there and use it, you have collateral within there. Instead of having a home that can appreciate or depreciate in value, you've got this whole life insurance policy that's getting dividends every year. And then you've got this guaranteed cash value that continues to increase. And then collateralized behind that is the death benefit. So if you were to ever pass away, whatever money you've taken out of it just goes towards the death benefit. And the cool thing is with these policies, because we use the dividends that are paid every year to help increase the death benefit, not only does your cash value increase, but the death benefit increases every year as well. It's pretty amazing.
Yeah,
right?
It is.
The most important thing about this whole concept, John, is a concept called uninterrupted returns, right? So it allows for constant growth. So as opposed to taking money out of your investment, your 401k, your mortgage, or your home, what you're doing is when you do that, you're taking a piece of the pie that's otherwise exposed to interest. With this, you're not taking out any of your own money. So the amount of cash value that continues to grow stays whole. And then from there, it's constantly exposed to interest uninterrupted. So it just continues to compound over and over and over. And Albert Einstein, he said, do you know what he said is the greatest power or the greatest, most significant power in the universe?
It's compound interest.
That's right. Compounding interest. That's why I love working with you, man. You know your stuff.
I think it says the eighth wonder of the world or something.
Yeah, that's right. The eighth wonder of the world. So, yeah. So, that's really basically what the whole concept is. And I do want to share, our values, John, with our company. What we share is, the core values of Integrity Marketing Group, which are doing the right thing, even when no one's watching. We value integrity, family, service, respect, and partnership. And, so from there, John, do you have any questions or is anything else additionally you might want to go over?
No, this is pretty much it. I just kind of want to give people a sense of one of the options that we have outside of life insurance, annuities, and other things that we offer. Because a lot of times, like I said, because of who we are, being a lot of us being middle class, we're not exposed to those things that
Mm-hmm.
really change our families' lives. So,
So I want you to think about this. One of the questions might be by people listening to this is this for me, right? Is this something that I can do,
yeah,
or
absolutely.
that's good for me? Well, think about this. If you're max funding your 401k, right, and you're taking advantage of your employer max, but you want to make sure you've got extra money at the end of the month that you want to save, right? Instead of putting it into a money market account, instead of putting it into a savings account or something like that, what you do is you put it into a whole life policy like this. You have a death benefit that then goes on top of that. And as this money grows, typically you can have access to up to 80 to 90% of your money within the first year. And as this money grows, you have access to use this money for whatever you need it for. But then it's as you pull it out, it's not taxable as income, it's not reportable as income. So you can use it to either fund your life right now, make big purchases, do whatever. You can also then use it to help fund retirement later on in life, and it won't affect your Social Security, and bump you up to where either part or even more than that of your Social Security is taxable. So there's a lot of different things that can be done with this. Business owners love these types of policies because it gives them liquidity. They can take a lot of cash that they have on hand, pump it into a whole life policy, and then turn around and utilize that cash for whatever they need it for without having to worry about the tax implications. So it's a pretty great product. And again, if anybody has any questions, obviously they can reach directly out to you and we can walk them through this and run some illustrations and see if it makes sense.
Well, thank you very much, Neil. Did you have anything else that you wanted to add that
Nope.
may be helpful?
Nope. If actually one other thing is, if anybody we're doing these business opportunity or overview meetings throughout the country, and I'll be in Little Rock, Arkansas on August 18th, and I'll be in Oklahoma City on August 15th. So if you know of anybody or you're in that area, feel free to reach out to me, and we'll be publicizing it and marketing the events. But we'll be doing business opportunity overviews and a lot of training as well on those.
All right, Neil. Always a pleasure, man. Thank you very much for coming on.
All right. Appreciate you, man.
You have a good one.